Now, it's been another rough end to the week at the Nairobi Securities Exchange with the all-share index at 133.4. Now, we want to make sense of this decline, and for more on that, we are joined by Kevin Ngige, a senior equities analyst at Genghis Capital. Kevin, calling it another rough week, I feel like that's an understatement. But before we get into those numbers, Wednesday when we had just had that conversation, there were changes that were made regarding the Capital Markets Authority in Kenya. First, bring us up to speed with those changes.
Thank you very much for having me, and although it's a pleasure. So yes, indeed, there have been some changes. I remember one thing we talked about last time was the introduction of a levy by the CDSE. That levy was subsequently scrapped or shelved temporarily. Remember, we mentioned that they had not done any public participation, but then the chief executive, while speaking on social media, said that some fees are legislative, others are not. And that fee that they had introduced was one of the fees that was not legislative. As such, they didn't need to undertake a public participation initiative. So, of course, there was some backlash on social media, and 48 hours later, the fee was scrapped or shelved until further notice. So that's some of the biggest changes that we have seen in the market. I think that's one of the biggest ones that affects investors directly, as it was supposed to come into effect on 15th of next month.
Now that some kind of sanity has prevailed there, what does this say, again, going back to that question, what does this say about the decision-making process there at CDSC or the lack of decision-making process there, the out of touch, and the future of such bureaucratic bodies when it comes to the running of something like the capital markets?
I mean, it's more or less what we discussed last time, that this is extremely a joke from the executive and from the board. And one of the things that make me lack sleep at night is that CDSE, part of the biggest shareholders for CDSE is NSE themselves, Capital Markets Authority themselves. So for CDSE to come up and introduce such levies to investors, it means that NSE and both NSE, CACIB and CMA were privy to such information, but neither of them said a thing in the entirety of this period. So it was only the investors and the backlash on social media that made them rethink that fee. So of course, the decision-making process that CDSE is wanting. Yes, they've introduced some new systems to enable stuff like day trading and securities borrowing and lending. But then again, these are not inventions that make the turnover tick, if I may say so. So we haven't really seen an uptick in activity thanks to the introduction of day trading or securities lending and borrowing. And I believe that this monopolistic nature of some of these corporations are some of the reason we are seeing such archaic thinking, if I may put it that way, in terms of, I think it's about time now we introduce blockchain in terms of how we digitize and have a central depository where, backed on the blockchain and not an institution that, we have an institution somewhere that's a monopoly and can just wake up and introduce new fees. So of course it's one thing, they've shelved it. I think it's shame to them or shame on them. And I think we just need a whole change of that board and executive at CDSE.
Kevin, finally, that you talk about blockchain, there's an interview I just had earlier regarding how that can help not only integrate payments on the continent, but also integrate stock market. So you better check out that interview a little bit later on when you get a minute. Kevin, now let's talk Nairobi Securities Exchange. Last week, it shared about 294 billion. I seem to be having egg on my face because I'm a firm believer, or was a firm believer in the Nairobi Securities Exchange. It began the year trending upwards, record numbers, 164, almost hit 170 at one point, 133 as of today. Let's make sense of that.
I mean, it's simply mind-boggling to even think of those numbers. To your point, I agree with you. If you also look at the 20-share index, I mean, we are talking about 1,700 levels. Less than 2 years back, we were talking about 2,800 to 3,000 levels. So we've almost halved by 50%. I mean, things are tough. We'd start the year, of course, on optimism in terms of the executive had opened up the country. I think we were among the first countries in East Africa to do away with the mask policies. We were the first to fully open up our hospitality areas, our clubs were open, hospitals, schools. So there was just optimism that business was going back to normal. But then there came these exogenous shocks Of course, you've seen the Russian invasion of the Ukraine. You've seen Western worlds, especially the European area and the American, increasing their rates. And then again, remember, we are just 2.5 months shy to an election that is hotly contested. So I think these are some of the issues. Just yesterday, we saw a headline out that Kenya might or has already defaulted on some of its international obligations to some of the international lenders. This is the money we were lent to for dam construction for dams that were never even constructed thanks to graft. So I think some of the negative headlines and sentiments have really contributed to the capital markets just shrinking and shrinking further. We've seen Safaricom now to levels of 27.80. The last time we saw these levels were just when the pandemic hit us. So Safaricom, as I mentioned before, accounts for 57% of our total NSE. And as such, when you see Safaricom falling by that margin, then you expect everything else to fall further. And just today was the books closure of one of the biggest banks, Equity Bank. So I'm just keen to see what will happen on Monday, especially in the banking space.
Great that you bring that back. So that means you have a date with us on Monday. Kevin, Safaricom, let's focus on that counter, right? Safaricom was is one of those equities that you expect people to keep buying. Why? Look at that entry into Kenya. I bet it's going to cross-list on the Ethiopian Securities Exchange the moment that is launched later on in the year. That entry into Kenya only spells one thing, increase in capital, because, M-Pesa traction, which is the most used fintech on the continent, going by numbers margin. So why are they selling? Last week, 71.4% of the capital flight was coming in from Safaricom. This week, also above 50%. Why are they dumping that stock?
If for foreign investors sitting somewhere in Miami or California and they're looking at someone who doesn't even know Kenya or Nairobi and is looking at the MSCI 100 Frontier Index, one of the stocks, and they're looking at telco, one of the stocks that will highlight on the screen would be Safaricom. So you'll find that most of these people, again, if I may reiterate, is that Safaricom accounts for 57% of our total market capitalization. So most of these indices are held together by Safaricom by itself, So any of these international funds that actively want exposure into Africa, and especially in the telco space, one of the stocks that they're going to buy in plenty would be Safaricom. So them dumping Safaricom is not a matter of there's something fundamentally or technically wrong with the company. It's just that that's where they have most of their exposure. I mean, again, Safaricom has 40 billion listed shares. So again, it's by far the number one counter with the most tradable shares. So I think some of these factors are the factors that you can see, just pulling the entire market down once Safaricom goes down. But there's nothing really fundamentally wrong with Safaricom. We've seen them. Yes, it's a mature company. We don't expect exponential growth like we've seen on M-Pesa. I think they've gotten to a place where the curve is now flattening. But then we've seen some active engagements with management, especially going into Ethiopia, and they're looking further out. So I think it's a tough time. We're being affected mostly by exogenous factors. I think one of the best times for any investor to just look at these markets would be sometime after the election. Anytime between now and then, I think you'll just be burning your fingers.
Kevin, we're talking about the African Continental Free Trade Area Agreement, and where am I bringing this into this conversation right about now? It's because of the opportunity, with this capital flight happening. Should the Nairobi Securities Exchange, should Odundo and Co. go on a roadshow on the continent whereby people know the value of Safaricom?
I mean, Safaricom has by far, I think, just held the capital markets together. Forget Odundo and Co. The NSE, yes, has tried. They haven't really done much. I think they've done maybe 1, 2, or 3 roadshows. Safaricom by itself have a roadshow scheduled on their calendar for the year. So I think Safaricom really does a lot in just putting our name outside there in terms of the Kenya and Nairobi, the capital markets here. I think, I don't know, I keep thinking that Safaricom should just be rebranded to Nairobi Securities Exchange and it just holds the exchange. So I don't see much that Odundo and Co. are doing. I mean, one, you can see recently, just this week, they were quiet and mum about the introduction of these levies by the subsidiary, a place where they own 48% ownership of CDSC. So they were quiet about that. They've introduced a couple of inventions in November last year, brought day trading. It only accounts for 5%. We haven't seen the numbers. I'm just quoting the CEO. Later on, we have securities borrowing and lending. That hasn't really taken off. We are losing close to 300 billion in paper wealth every single month. The stock market is down 22% year to date. I mean, we just need to sit down and re-strategize. It's Odundo's last term. I hope he does something for his legacy. Otherwise, he'll leave the exchange at the worst time, I think, in 2 decades.
Talking about Odundo and his legacy, how does he create some form of magic wand and help the NSE come back to somewhere close to 145, 147 going by the end of this year? I want to be optimistic, man.
To be optimistic, I've always quoted one of my favorite countries, Pakistan. I'll quote for you another new one today, Vietnam. Vietnam, on average, for their local clients, they open 298,000 accounts every single month. That's the average year to date. Go back and talk to CDSE. CDSE have 1.6 million total accounts, 1.1 million of which are dormant. Out of the 1.6 million, only 3.4% are actively trading, and that's around 57,000 shares. I mean, I don't know how worse it can get. That's CDSE where NSE have 48% shareholding. So one of the things I'd say for Dundo, people are really hard pressed. The economy is not doing as much. The economy and the capital markets go hand in hand. When the economy goes up, the capital markets go up. Right now, the economy is dwindling. You don't expect a miracle on the capital market. So what do? You have to spice up. You have to bring up these local retail investors who are now only contributing maybe 4 to 5% of total turnover. So what do? Zero rate fees, bring down fees, especially on day trading. 5% incentive is not enough. Bring it down to 5% total that you're charging people, so instead of charging people 95 and giving them a 5% discount, give them a 95% discount and charge them only 0.05%. So these are some of the things we need to do. We need to look beyond revenues. There are tough times, and just look at how do we hurt now, but bring in more people whom we could benefit from later.